Hi, everyone, and good afternoon. Tonight's topic, the test of time. It's funny, I picked this one and thought, well, this will be one of those that I'll have done early and I'll be probably struggling for information to fill this up because I tend to run long on these. I don't like to go past an hour on these. I want to keep them all to an hour just so everybody knows when they watch them what to expect. And when I do these and I get the topic, I always have like a whole bunch of topics. I still have like probably the next 10 topics. And when I decide to pick one, I usually pull out a little Word doc, and I dictate everything, as you can probably tell by some of the sentences I say. And I usually just fill up, 2 pages of stuff just right off the rip, just right off the top of my head, and then I let it sit there for a couple days, and I keep adding stuff as I think about it, and then put that all on slides, like what happened this time. I just kept adding stuff to this, and I had slides that I knew were past an hour, and I still have some topics here I'm not even getting to. So I don't know how this happens. I think I just must ramble on too much about stuff because this should be a simple topic. But for some reason, I, I made it a long topic. So let's get going. It's going to be maybe, I hope, an interesting one for most of you. I hope some of you will find this very boring because the title is The Test of Time. And if you've withstood the test of time, you can maybe sit back and smile and say, yeah, I get that. But I think it's an especially perfect time to be doing this. Why is it a perfect time? Well, let's begin, and that will explain why. I don't like to read slides per se, but I do want to read a couple of these. And this is sent to you, so you could have read this, but I doubt many people actually do. Back somewhere in 2002, 97% of all E-Trade accounts were dormant. That means no activity. That means broke. And for those of you not familiar with the history of the market, there was a huge market rally throughout the 90s. It crescendoed to a climactic type top. The current person in charge at the time of the Fed, Greenspan, called it irrational exuberance, which actually is a term I've always liked. And things fell lower. A lot of people who terribly misquote the history of the market say that the 9/11 tragedy crashed the market. That's not really true at all. 9/11 actually was much closer to setting a bottom than it was to, the market did drop after that, but the market had dropped tremendously before that. And 6 weeks later, it actually hit the bottom. So it was just a natural occurrence that happened at the time. But anyways, there was this big rally in the late 90s. There was all this hype for a few years that all these people were making money day trading, because day trading was new then. Late 90s, it was new. But they weren't really day trading. They were just online investing, which was new at the time. Let me get my little red ball in here. Just buy stocks anytime, anywhere. We started to joke that we would go to the grocery store and the checkout person would be telling their friend about how they added Intel to their tech portfolios. Not that checkout people at the grocery store can't have stocks, that's fine. But when everyone has stocks, it starts to tell you something, and that actually is a technical indicator in a sense. Since tech not a technical indicator, but it is a technical factor. Since chart movement and price movement is based on supply and demand, when your babysitter has a stock portfolio, you have to start wondering. Even the paper boy was buying stocks, paper person, maybe that should say, excuse me. But they weren't trading. They were just caught up in the hype. Most all were broke after the market fell. A couple discussion points. There's several different topics to hit on here today. There's no such thing as learning new strategies for a new era. It would be like a carpenter throwing out all of his tools because he moved from North Dakota to Florida. I really liked that when I wrote it. That was right off the rip there. I thought that was pretty good. This would be silly, but it really is the same analogy. It truly is. Lots of people have success for a few months and then they drift away. These are typically untrained people who don't know the language of charts. So, I don't think you've seen this writing. So, 1999, I was a member of a trading room, and I would see somebody state that he was buying Yahoo at the height of a rally intraday when it was already up $15 or $20. I'm thinking to myself, is this guy taking some kind of recreational drugs from the 60s before he trades? Of course, at that time, people didn't stop out of things. So, and you're probably wondering, why didn't people stop out of things? Well, that's simple, because prices never fell. Stocks always go higher. Don't you all know that? So he didn't stop out of things. So I was right that day as Yahoo would fall 10 or $15, but the next morning, they'd hold it, of course, the stock would gap up $50, and the person would brag about it. He was right, I was wrong. Where's where's Art Vandelay? He was right, I was wrong. There came a day that Yahoo didn't gap up $50 the next day. It gapped down $50. 97% of these traders were done. Not in one day, but over a period of time. There was long discussions. There was the time that I was running a trading room during that period of time when the market was falling. And I was 1010% bearish. And I had to deal with people who wanted to, quote unquote, buy the pullbacks, which were not viable pullbacks. We were in free fallville. And these people never recovered from that. As a matter of fact, the brokerage industry suffered for years. They dried up because everybody had lost their money, so to speak. This is an informative event that will hopefully help you to be a long-term trader investor, not just a flash in a pan. This today is not going to be about a market call. I could have done this a year ago or 3 years ago. Do you want a market call? I'll give you a market call. Here it is. The market will crash. How's that? You like that market call? I guarantee it. What matters is when it will crash and managing it in a way to make money from it. I've been bullish for 10 and a half years without hesitation. And there have been people calling for the market top for 9 of those 10 and a half years. The tops and bottoms of the big moves in 2000 and 2008 were technically pieces of cakes. They were simple. The market was completely technical. It's always technical, but I mean it was just a pure technical pattern that set the tops both times. Naturally, after the fact, you hear all the people tell you the news stories that caused it, but as always, it wasn't the news story. It was very seeable, tradable, the top and the bottoms of both of those time periods. This time, however, is a little bit different. And again, I don't want to turn this into a market analysis session. Does anybody know why it's different this time? It may be different. We don't know for sure yet. It may be different. So I have to plan for alternate events. I'm waiting for an answer. Does anybody know why it's different this time? Yeah, you're right, KP. You're right. But the wording that you have to say is, if you go back to any of the other prior big market reversals over the last 20 years, somebody would always look back and tell you why it happened. They, whatever it was, real estate crash and blah blah blah, whatever it is. But what's different is, see, there's 3 ways that markets make tops, and those 3 ways are, I've outlined them in a lot of detail in one of the videos on the website called A Bookmark on the Market. It's from a while ago. But the easiest way is what happened in 99 and in 2008. Those are the easiest ways. Yeah, well, KP, the Fed pushing doesn't matter. That's always part of the equation because that shows up on a chart. See, what's different this time is that when you get to a certain level, the market is not necessarily going to crash of its own volition. But if you get what I call some shock value news. Now, shock value news, everybody else thinks the market reacts to news, and it doesn't really. I mean, not in a tradable way, not in the long term, unless it's shock value. And the problem is here, we have this shock value event. And this is the first time this has ever really happened, where the shock value event moved the chart at a top or a bottom, right near a top or a bottom. And it is very sensitive to that. And then it ran into a second news event. And you have them on there, the election as well as the pandemic going on. And the only problem that's presented is that as you come into the top, you could get these really wide swings. In other words, 99, 2008, there's the top, you're done. You're done. There's never a challenge. What could happen this time, though, is you could think we're done, and then we do this. And I think that's what's going to happen. So you could get knocked out. You could be taken out of all your shorts and then get long and then be wrong, or you could be short and get stopped out of everything. And it's not simple always to just say, get out, get in, get out, get in, because if and when we drop, it could come in a really big hurry. So the main focus of tonight that I want to get through to all of you is that I see events duplicating themselves from 1999. I literally do, very, very much. And where in 1999 it was E-Trade and people were able to trade online, now there's the Robinhood type of apps where anybody sitting anywhere, college student, can go in and buy $50 worth of stock. Not 5 shares or 10 shares, but $50 worth of stock, all kinds of new stuff coming out. And we have people that are bored and don't take this the wrong way. I know a lot of people are hurting and whatever, but there's a group of people who are sitting around and have some money and decide they want to start throwing money into the market and find that it's an easy thing to do because stocks always go up. So this is kind of the topic I want to hit around a little bit tonight. And to lead into it in a way that makes more sense to you rather than just saying, well, here's what happened, here's what's happening now. Let me run through a couple of things that will maybe help lead us all to the understanding that I have, not, don't take that the wrong way, but trying to get across to you what I want to get across. Boom. Let's do this first. Subjective versus objective training. When people come to the market, they are almost 100% subjective. Oh, by the way, the last event I did was tips for newbies. And this one is the test of time. These are what I call kind of softer topics. Before that, there were some very hard topics, meaning very technically oriented. Most people love technically oriented. Before that was intraday market analysis, the three-legged stool, only 2 times you have an edge. There's rookie sayings within the part event, day trading 1 and 2. So I had like 6 out of 7 really, hard technical events. So I'm doing 2 in a row on the soft side. I'll get back to some hard ones. I'm just saying that in case some people only show up for the charts and that type of thing. This is a softer event. But let's go through this. Let me then back into this topic again. But let's go here. When people come to the market, they're almost 100% subjective. What does that mean? That can't go higher. This has to hold here. This is really good news. I mean, that's really, right, everybody? Whenever you started, you probably started that way, right? Even if you got help on day 3, on day 1 and 2, that's how you thought, right? I mean, because that's all you have. And the market's easy, right? And everybody makes money in the market. And all you have to do is buy low and sell high and all these great comments, and that's what everybody thinks, right? Well, what happens when people come to the market 100% subjective? Answers. What happens when people come to the market 100% subjective? By the way, my answer might surprise you. What happens when people come to the market 100% subjective? Like this. That can't go higher, going to short that. That can't go any lower. I'm just going to buy that here. Who knows? What happens? For all of you out there, get your hands on the keyboard. I love a little participation here and there. Doesn't hurt at all. Plus, it goes a little faster if they lose. Well, you know what the funny thing is, and that's kind of the point of tonight's presentation, everybody, is number one, they may get slaughtered. But you know what may happen for a while? They may make money. They may make money. And you're saying, well, how can these, whatever you want to call them, how can these fairly unskilled people make money? Well, it's really not that hard necessarily, right? If you're just naturally bullish, and it's a bullish market, and let's say something good news comes out, and you don't really care how much you lose, right? And when I say don't care how much you lose, these people may care how much they lose, but they don't do anything to prevent losses, right? Stocks can only go up or down, right? In a sense. So it's kind of like if you're in a bullish market, I mean, it's really a good strategy, actually. You're in a bullish market, pick a bullish stock, just jump in, hang on to the seat of your pants. And actually, to some extent, for a short period of time, this person may do better than somebody who is just too constantly scared and stopping out of every time it backs up 3 cents. So these people can make money for a while. Stocks can only go up or down. Well, what does that teach you when these people make money? Even now I have this can't go higher. Yeah, I know you do, Jagdish. I know you do. What does this do to somebody, though? You have a friend. He says, hey, I heard you're in the market. I just got in the market, too. I got a Robinhood app. And you know what? Yesterday, I just bought DKNG. I call it Dunkin' Donuts, but it's actually DraftKings. I just bought blah, blah, blah. I just bought some Roku. Man, I'm making money every day. This is a piece of cake. By the way, in the back of my In a cloudy little cloud in the back of your head, you should be picturing 1999 at this point. Well, what does it teach you? It teaches you that good news makes things go up. Well, it's not really true. Things go up, there's good news all around, there's a correlation but not a causation there. It teaches you that stocks never fall. I've heard intelligent people say that to me. Did you know, Gerald, did you know that at any point in the market ever, that there's never been a 40-year period of time that you would lose money? Did you know that? No matter what date you pick, if you go forward 40 years, you made money. Isn't that a great thing? I guess that means that stocks never fall, so we should just be bullish all the time, no matter where they are, no matter what's going on, no matter what's happening, right? That's what most brokers will tell you, right? Yeah, the problem is that if you went long at the wrong times, it would take you 17 years to get back to even. Is that okay with anybody? And the truth of it is that's not really what happens. The truth of it is you simply lose all your money because you're leveraged, you're margined, right? And you're gone, you're done. And you don't have the knowledge that you'd be back in 17 or 20 years or whatever. And it's a stupid comment anyhow. Why do you need to take a decline for 2 years, for 6 months, for 3 months? Why do you need to sit through that with money that doesn't have to sit through that, especially if it's money you're putting in and out of the market? If you hang with something, even when you're wrong, you'll be right. That's what you're taught, right? Let's explore that concept for a minute. Now, we're on this topic of let's do this for subjective versus objective. I'm still going to stay on this topic, but I want to just go down this little road here. If you hang with something, even when you're wrong, you'll be right, because I want to tell you a little story. Yeah, right, KP, exactly. Oh, of course. Yeah, KP, that's a good point. Thank you. Yes. It's an excellent point. The market never goes broke. Correct. You will pick stocks that go to zero. And yet they don't come back. I don't care how many years you wait. If your stock goes to zero, you're never getting it back. Or if it falls and never, absolutely good point. But the quote unquote market, whatever that means, yes, excellent point for those who didn't get that. Thank you for bringing that up. So let me go down this little road here. To hang with something even when you're wrong, you'll be right. So we're on subjective versus objective, and I want to just bring up this little story because I've been trying to fit this into a presentation, and here it is. Someone asked me, one of the things, some of you don't probably knew this because I do all this free stuff, but I have a long-term trader investment letter for long-term trading. And somebody ran across it on the site and said, gee, I didn't even know you did it. I said, yeah. And he asked me what the return was. It was back in April. And at the time, it was up about 5 or 6%. I was not really proud of this because I really should have had some shorts in there before the Corona thing. And I didn't. I should have. I was just a day off, day or two off, and I never shorted during that time. So that was just based on longs. And at the time, the market was down 15%. Trader was up 5-6%. The LTT is the long-term trader. That's the DTS product. And he said, boy, that's pretty good. But what's wrong with that comment? You're not going to get this answer probably. Let me add some more meat to it. What if the market was up 7% and the long-term trader was up 6%? The market was a better position to have at that time because it was 1% ahead for the year. What's missing though from this analysis? What's missing is kind of the feature of what I want to talk about here. There's a lot missing. And that was, exactly, Steve, exactly. The long-term trader was never, I tell you the truth, I don't have the exact number. It was never down much at all. It was down a day or two a little bit. It was just not down a lot. But the market was down 30%, right? So it's easy when you're back to zero in the market to say, oh, gee, I hung on and I'm doing fine. I'm green again for the year. But what's the problem with that? The problem is you were down 30% and you didn't care. Paul, what do you mean you didn't care? Well, you didn't do anything about it, right? True? Any of you, if you've been in the market, whatever that is, and you went way down and you hung on, congrats for hanging on because you're up. But what's the huge problem that you're overlooking? Anybody who did that? Yeah. What if this is 1999, 2008? What if it didn't come back? You'd be broke. Oh, Paul, I wouldn't be broke. I would have gotten out sometime. When? QQ down to 30%. If you held from negative 30 to plus 7, what if it did not come back? Where would you have exited? Where would you have exited? Tell me. If you hung on, you were down 30%, you didn't exit. Where would you have exited? Tell me. I know where. Where. You tell me. Where would you have exited? This is a super important topic, probably for anybody that's got any money out there. Yeah, exactly. Here's where you would have exited. You would have exited in one of three places. Never. When your broker takes you out, i.e. margin call. When the pain is too much to handle. By the way, how do you define when the pain is too much to handle? The definition, anybody know this definition? It's very clearly defined on the charts. You get out when the pain is too much to handle. The pain is too much to handle at the bottom plus or minus 1 day, correct? That's the way it usually is. So it's not okay to, and I want to make this really clear to you, 97% of the people went broke that's not true. The people with E-Trade accounts, which was the premier day trading place to be, went broke. But you know what? You know how many people went broke just from their normal accounts? Now, I'm not trying to warn you of any coming thing at the moment. I'm simply telling you that you have to be smart, and I've seen people be really stupid. The reason my long-term trader was good, and I wasn't thrilled with it, but it was good through the whole thing, was because of really good management, because of selling stuff at highs rather than stopping everything out at lows and rotating through and bringing in some new stuff, selling other stuff at the highs and rotating through like that. Matter of fact, somebody even asked me, I had an Adobe position that was probably, I think it was probably my best trade last year. That was up a ton. And I ended up trailing out the last part of it at the top. And somebody even asked me, why, this has done nothing wrong. Why are you getting out of this? And I explained, well, look where it is. It was accelerating higher. I said, you know what? When this dropped, where would I trail it out? I'd give back like half of my profit. I don't want to do that. It doesn't make sense. So I want to rotate through and sell at highs and rotate in new stuff, at the bottom, so to speak. It's all part of a process I've talked about. And actually, if you watch, there are only a couple months ago, the Day Trading A to Z Part 1 and 2, I go through some of the stuff that you can pick up and follow to some extent. So back somewhere in 2002, 90% of E-Traders going dormant. This means that's why that happened, because of what I just explained. We started to drop. People said, oh, I'll just hang on, and I'm sure we'll come back, and it never comes back. You have to be very, very good technically to know if you can do that or not. And sometimes it's not clear to anybody. So back to subjective versus objective. When people come to the market, they're almost 100% subjective. I went down that little road there just to explain that one little point. Your goal, however, is to become as objective as possible. This is what learning about price action does for you. But you can never become 100% objective. It cannot work. There is no discussion about this. It's not up for debate. You can send me whatever garbage you want to send me. It doesn't matter. It is just mathematically impossible. It is physically impossible. There is no objective system that beats the market. Anybody know why? It's because the market is a zero-sum game. We all can't win. You have to be smarter than somebody else. And by the way, it's not all that hard to do. It cannot work. You need structure that you get by learning, and then you need the art. Part of that you get through learning and part through experience. Experience comes faster when you're taught what to look for. But there's also, however, so that's subjective versus objective. And looking at fundamentals or news, of course, is always purely subjective. And you've heard me in many presentations discuss how that's one of the worst things that you can do. To demonstrate that, I ran out of time here, so I'd like to give you I think I'm going to give you a great demonstration. And you know what I'd probably like to do that? I have scheduled something I haven't done in a little while because it's just been busy, but not this Saturday, but a week from Saturday, like 10 days from now, I put on the calendar, Here's the calendar. A coffee with Paul, coffee at DTS on Saturday morning. I'll run through the subjective. It's a really neat thing. I've been waiting to do the subjective thing about news, and I've done several things with the subjectivity of news and how you cannot make money from it. You think you can sometimes. You can get tricked, like I just explained to you, but you really can't. But what I wanted to do today was to talk about the subjectivity that can occur on a chart. On a chart, there can be subjective things and objective things. On a chart, a technical chart. Does anybody know? Can anybody list, first of all, some objective things for me? That'll be the easier one. When you look at a chart, what are objective things? Things that are not subject to somebody's opinion or interpretation. What are objective things? Perfect. Price. Trend is subjective. If I lined up 13 traders, Gary, and picked the right chart and asked if it's in an uptrend or not, I would get half and half answers. Well, when I say subjective or objective, maybe I didn't clarify this right. Price action is correct. Volume bars would be correct. Those are things that are on a chart and they're definitive things. And I'm talking about in terms of using the concepts to try to make money. In other words, prices reverse at a certain point. That's on the top or bottom of a price bar or a pivot or whatever it is. But there are things that traders use for trading that become subjective. If you are buying a stock at a moving average, or when moving averages cross over, or using any technical indicator, those are all subjective. Can you guys list technical indicators? You know some technical indicators? You ought to be able to list about 20 of those in the time I can finish asking you to. MACD, that's always seems to be the first one out there. And there's RSI and stochastics and Gann waves and anything else you want to do. The no indicator, that's good. All those things are subjective, meaning that just because the stochastic says this, or the line crosses that, or the CCI goes below 10, it does not mean the prices will rally. It does not mean that. It doesn't mean it at all. And yet, many people turn to this subjectivity on a chart as a shortcut to try and read a chart. And that is always a huge mistake, I assure you. And as a matter of fact, I'm going to prove it to you very shortly. Matter of fact, I'm going to prove it to you right now. Is everybody ready for this? I got to say one thing before I do this. There's anybody that's brand new to me this presentation, do not tune out in the next 6 or 7 minutes, okay? Just no matter what, even if you've closed yours, just tune out. Okay, are you guys ready for this? Because I have been working on this for years, and I mean years. Are you ready? I need to know if you're ready. Are you ready for this? You are. Okay, here we go. This is years worth of work. PL, those are my initials. Paul Lange. The Super Hydro Inverted Tachometer System. And I really feel this is the secret to trading. You simply download the software that I developed. You put it on your computer. These lines will pop onto your chart. And when the blue line crosses the red line, you go long. Here is your stock, Apple, one of the favorite stocks out there. Blue line crosses the red line. It hiccups for a little bit and then screams higher. The red is the drawdown from the time you entered. The green is where you take your profits. Amazing. Don't like Apple? Wow, that's holy cow, Batman, super trading. AMD, blue line crosses the red line. Well, a little bit more of a drawdown, but that's okay. Just hang in there because the profits are coming. You can't miss with this system. It's absolutely, positively incredible. You want to buy it? Gerald wants to buy it. All right, guys. You got it. It's the Super Hydro Inverted Tachometer System of Trading. Entry. Simple. Anybody can do it. Boom. Guaranteed profits every single time. Makes money just sitting at the chart while you're watching reruns of Gilligan's Island. Get your MasterCard ready. I'll give you my email. You send it in. What's the price? Chris is sharp. Normally, folks, this is $19.99 a month. But you, being DTS members, we're bringing it all the way down to just $99 a month. And with that $99 a month, you get a free online manual. You get a free 800 number if you can't find the manual. And you get free self-tutoring on all the advanced concepts. This is something you just can't believe, folks. If you're new, that was more than a little tongue-in-cheek. I had to make fun of that a little bit. But but there is a point to this. It's not just to be silly and have fun. I had to do a fun slide in there. For $9.99, we'll add on the Elliott waves there, Larry. Yeah. But in all seriousness, I do want to point something out to you. That system I just showed you on this chart with Apple, there it is, right? Okay, and AMD. It is a system that people could use. Okay, now that's not actually the PL Super Hydro Inverted Tachometer system. That actually is a moving average crossover. Right, that's all it is on there. But I want to show you something. In all fairness, I said, okay, because this is how you get sold stuff, right? Because they show you how it works. So I said, let's be totally fair. I went and I took the top 10 symbols that are in my hourly chart watch list. Now, probably at least a dozen of you in here have that watch list. It's in the room. Right? You got some of you have that watch list? Anybody? Yes? Anybody in the room? Anybody that's been to an event? The PL 300? Okay. So I'm going to take, just to make sure I'm being fair, I'm taking the top 10, right? I borrow from the military, Robert, you're right. But I took those top 10 and I said, okay, let's apply to the top 10 and see how this system works, right? Because I just showed you it worked great on those two stocks, right? So so I randomly selected these. I really didn't. I didn't pick any special system. I said, let me just do this. I found the first two that worked to use as an example. And I said, let me take the next 10 and just see what happens. So here's GE using the same system. Moving average crossover, you'd enter right there. You never made any money, and you entered the high, and it just kind of, you'd still be in it, I guess. I don't know where your stop would be or where you'd be going for, but that didn't make any money on GE. Tesla, you would have entered right here, and you'd still be sitting in it. And actually, by the way, Tesla looks pretty interesting for tomorrow on the long side. So that would have that might be okay tomorrow. And this is, of course, you're holding these for a couple days or whatever, right? And I'm trying to, support to you, convince you that this system does work. So that's, somebody keep track of these, by the way. That's one that didn't work and one that maybe is working, because it goes here. So this one here, we entered here and it went up to here. Do you take profits there though? I don't know. It's one of the problems with entry systems is that it's not often clear where you take profits. Here you would enter right here. That's kind of a bummer because you would have entered like the minute it started falling. But hey, you got to throw one of the dogs once in a while. So that's a big oops. You got to throw one of the dogs once in a while, right? Here, oh, this one hurt. You entered here, right? There's your entry, and that was just painful. I guess you would get out of that at some point. I don't know when. I guess when you lose, a certain percentage of your account or something, you just get out. I don't know. Oops. Again, these are just random selections. I mean, this is just pure. Well, that's the funny thing also, Dave. In all, I'm making fun of this, but in all fairness, we rallied the last 2 days. So this should be working in general, right? I took 10 stocks off my highest volume stocks list. Most of them are market type stocks. So this should have been a great couple of days for this system, right? And yet something's wrong. It doesn't seem to be working. Here we entered here. Would you have stopped out here? Yeah, I don't know. Here, oh boy, this one, that was another bad one. We entered up here and we're way down here. We never went higher than that. So would you get out here? Well, how about this? Why don't we start saying that we'll use this, but if it looks like we're up too high, maybe we'll just skip the entry. How's that? Or why don't we start adding some other rules to this system? Yeah, I don't know. your Facebook actually works. So I didn't count those per se, but I think 1 out of 10 worked, and 3 out of 10 we're not sure, and 5 didn't work or something like that, right? But the point is, if you look at the stuff, I don't care if you're using VWAP, if you're using stochastics, and of course, what people do is, this is a 60-minute chart, Harold, yeah, that I'm using to show here, just because it had the cleanest examples. You could use the same stuff on a 5 or a 2, it's all relative, you know. But the point is, I don't care what you pull out. You know I'm making fun of this, right, Harold? Right. I'm a little concerned because you asked what chart I'm using. This is just kind of, the point of this is that while I present it in a funny way, there are a lot of systems out there that are no different than this that are, you know, people go for because they're shown the magic at some point. But what people do then is when they get this and they start adjusting the parameters to match the stock they're looking at. Do you know what I mean, everybody? Give me a 1 on the screen when you've been there, done that, seen this, heard this, right? You start saying, oh, wait a minute, I'd kind of like to avoid this entry. So let me change the parameters. Instead of using a 20 and a 40, I'll use a 15 and a 30 and blah, blah, blah. And then you adjust the parameters so it works on this chart. But, yeah, exactly. But then what happens to the other trades? Well, now they're not working, right? You're always fitting 14 eggs into a bowl that holds 7 eggs. It's never going to work, and it never does. And it can't. It's mathematically impossible. The reason this is in this presentation is because this is where people go sometimes to get answers. And of course, they're ill-prepared, ill-equipped, and they just keep doing stuff like this, and they keep losing money. Rather than learning how to read a chart. And again, I always want to emphasize when I bring up stuff like this, I have nothing against anything that works. I'm just want to do anything, you know, to make money. I don't care what it is. If somebody showed me something that worked, I would incorporate it in what I do. I wouldn't boo-hoo it. I would go, yeah, okay, I'll still do what I do, but look at this great thing I found to help me. Now, if any of you think that I'm wrong, and you think, well, wait a minute, Paul, if you use a stochastic and you combine it with a MACD and overlay it with an RSI and look at it on 12 different time frames and then look at it through a mirror, it'll work. Okay, tell you what, you send it to me. Okay? You send it to me. I've been asking people this for a decade. Nobody has ever sent me anything that works. So go ahead and send it to me. If you got it, don't even type it on the screen now. Just send it to me. Tell me what it is. I'll look at it on 20 different charts and I'll tell you how it works. And don't even forget, there's another issue that most things like this are looking long or short, and you have to decide which way you're looking, which could become a real predicament someday. And no matter which way you're looking, if you don't recognize the market is sideways, you're going to waste your time no matter what you're using. Even something that seems to work for a period of time won't work at that period of time. So there's no free ride on any of this stuff. There just simply isn't. At this point, I threw a checklist out here because I was going to run out of time, and this way I can go with this checklist here and just talk about a few different things here. And I feel like I'm missing a few things here, but that's okay. You know, is that comedian that goes, if you blah 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 blah, you might be a redneck. Well, that's kind of the theme here. If you say yes to these conditions, you may just be the subject of this topic. And again, I don't mean to offend. I mean to warn. And you know, it's so funny because, yeah. Let me just back up a minute before I do this slide even. I've had 3 people in the last 3 weeks, which doesn't sound like a lot, but it was like almost the same exact story type of thing. You know, either struggling with something, or somebody they know just made money betting on one stock and went up a ton, and they're like, man, I'm trying to learn this, and this guy just made this much money in one day, and somebody else has this other system that they're using, and it's working right now, and blah, blah, blah. And these are all the little distractions out there, the little things that I feel keep most people from ever learning it right. I've trained a lot of people. I know a lot of people that do this. They learn the right way. And longevity, which is the topic of tonight, there's nobody that hangs around that does these other systems. They're just not. I believe you can make money for a month or 2 months or 3 months. But I've asked these people who, if somebody says, hey, this guy is doing this crazy whatever, say, do me a favor. Just mark this email, give it 3 months, get back to me. Tell me how they're doing. That's a real easy bet for me because very few people make it 3 to 6 months because they're not doing something that they can adapt and adjust to everything going on. When I teach the seminars, I'm going to share this with you because I think it's a great, I really got hooked on this analogy, and if you're in the seminar program, you probably want to go get some coffee because you're probably bored of me saying this. But the first 2 classes I teach, I really have an analogy I love, and it's about building a house. And I discussed the first class as being all the rules and things that you have to do and cannot do. It's about price action. It's about what always happens. It's about what never happens. It's about what you're never allowed to do. And I said, that's just like when you put up the foundation and the walls and the plumbing and the electric in a new house, right? And if you, in the construction building industry, any point in your life, in this group, somebody has to be. Anybody? Construction, building, real estate, a little bit? Yes, one, somebody? Nobody? All these people, nobody's ever been around building. Okay, Ricardo, when you build a house, tell me if I'm correct, anybody that's been in the business. When you build a house, if you're building like on a slab, the foundation has to be so many inches thick, correct, Ricardo? Has to be so many inches thick, right? You can't make it half the thickness to save money. There's no choice. That's a rule, right? 2x4s have to go up in most districts, 16 inches apart, right? You can't put them 4 feet apart to save money. You can't use 1x2s to save money, right? The electric has to be certain requirements, has to meet certain standards, has to be either in pipe or a certain gauge, and has to be attached a certain way, right? All the building codes. If you don't do them right, you get shut down, correct? Hey, Harold, right? So when you're putting up that part of a house, that's all the things you have to do and you cannot do. There's no discussion, there's no argument, it's always the same thing, right? You go look at any house before the drywall goes up, they all should be the same in the same city, right? Yeah, all should be the same. But all of a sudden now, we're going to bring in the homeowner, and put in a floor, right? Ricardo, can a homeowner choose to put in a tile floor or a carpet floor or a wood floor? Can they do that? Is there a right or a wrong legally? You may hate their choice. They may put in pink shag carpeting, and you may say they're stupid, but those are their choices. And that's how I describe the second class that I teach, Advanced Tactics, which is to say, none of this is mandatory, but all of it is what you use to help you make money, and you custom it to what you want to do. And this is why when you take these two things together, when you build the foundation right, and then you attach the wall tile, the countertops, the faucets that you want to attach, you have a concept that you know and you can adjust. And it's what I call the language of charts. In other words, once you learn this, there's nothing more to learn. You don't, I get so frustrated when I see an email go around saying, relearn the new strategies for the 2020s or for the Corona day. That's just ridiculous. There's no such thing as new strategies. Do you have to look at a chart and understand what may be changing over time? Absolutely. Absolutely. But that doesn't mean you learn anything new. Just like the initial line said to this presentation, right? If you're a home builder and you live in North Dakota and you're moving to Florida, you don't throw out all your tools, right, Ricardo? You don't trash them all and buy new tools in Florida, right? Rehabbing one now. Got it. All right. So here's a checklist of a few different things. You may be in trouble if your top strategies are totally summarized by a couple of words like head and shoulders or ascending triangle. They're what I call cookie cutter patterns. There's a whole webinar I did on that a while back. Let me make this statement, just make it clear. You can't make money from a head and shoulders pattern. You can't. Now, I know you're all going to jump on me and send me charts and say, oh, look, this worked, this worked, this worked. Doesn't matter. because to recognize when you should be entering, it's the worst entry in the world, and to recognize, now, the concept may be okay, but I have something I teach that would maybe be what you call approximate a head and shoulders pattern, but it's different, and it discusses it differently, and it gives you how to enter and when not to enter. But just the general concept, oh, here's a head and shoulders pattern, you look for this pattern, it's the worst thing in the world you can do, because the entries are terrible and it's very unreliable. And plus, if it's not in the right spot in the chart, which is what all these matter, it's not going to work. Everybody gets hung up on ascending, descendings, asymmetrical triangles, all these different adjectives to put around the word triangle, when all of that is only 10% of what matters, and the 90% is where is that quote-unquote triangle happening. To understand where it's happening across multiple time frames makes all the difference in the world. So if your trading plan strategically, if you're on this list, you probably don't have a plan. But if your concept is to use one-word trading pictures like this, I assure you, you're having troubles. And I'm just pointing it out to say, it's not a mystery. I know you're having troubles. You are having troubles if you have more than one technical indicator on your screen. I have moving averages. I have them for a purpose. That purpose is not for entry or exit. The purpose is for me to better understand trends. If you use even one technical indicator to tell you when to enter, you're having troubles. They can't tell you when to enter. It's impossible. Every chart form is a little different. You can't possibly get your entry from a technical indicator. You're having trouble if you have any subscription to magic software, even if you think it's a backup or just a crutch or whatever. You're simply unlearning what you should be learning. If you feel stocks always go up, these people just don't make it. Perma bulls do not make it. If you feel shorting stocks is risky, I get so sick of hearing some of these comments, and I just talked to somebody recently that honestly told me that they know a broker, use a broker, friend is a broker, I don't know what it is, and they convince this person that shorting is risky. Why is shorting risky, everybody? I just want to see it on the screen so I can scream and throw something through the window and then tell you why I hate it. Why is shorting risky? Some of you have probably heard this. These are words from people that ought to be locked up in a financial prison of some kind, where we lock them up between 9 and 5 when people are trading, then let them out after 5 o'clock. Why is it too risky to short? Yeah, infinite loss. If I hear one more, any broker that says that ought to just turn over his license or whatever. I just can't believe people even say that. So if you get a stock at 50, it's okay if you let it go to 0. That's okay. When do stocks go from 50 to 500? It's just a ridiculous comment. Anytime you're trading, you can have a disaster in either direction. You know what? Stocks gap lower way more than they gap higher in general anyhow. It's just a stupid thing. And this broker concept that the market is always up, and the most broker fund concepts is, well, to just try and bear with a pullback, to make it through. You shouldn't be making it through a bear market, for crying out loud. That's idiots talking. You don't make it through a bear market. You make money through a bear market. It is so ridiculous. You hear people say, oh, well, just weather it out, weather the storm. Try and lose less than the market. These are ridiculous comments. Ridiculous comments. You should be making money like crazy when the market drops. Period. So get these notions out of your head if you have such notions. I had a couple of comments right again, so let me just take it quickly. I got a couple of minutes. Let me know if you have any questions. And yeah, they are just salesmen, I know, but still. Unfortunately, people turn to them because they feel they have some knowledge, and they don't. I'm talking about brokers. And if there's a broker in here, they'll tell you. I've had people go, yeah, Paul, I'm a broker. You're absolutely right. They'll say that. If you're in here, feel free. Or if you don't like what I said, go ahead and yell at me. But I've never had anybody yell at me for those comments. Do you know, and again, I'm not doing this to ask you to come for help, but do you know when, I've been doing this a long time, you know when everybody comes for help in the long term? What's the expression? When all the horses have left the farm, or whatever it is, after it's too late. Everything's fine now, nobody cares, and when they're down half their account, then people like me get flooded with the emails and calls. What do I do? What do I do? Well, you can't do anything. You can't do anything. You just lost half your money. I don't care what you do. What am I supposed to do? I'm supposed to tell you when you lost half your money to just jump out now, and if it comes back, you can yell at me. You can't do that. See, this is what I want to focus on. Novice people always feel, and sometimes there is, novice people always feel, okay, give me the number. What's the top? Give me the number, right? Because that's how you do it, right? You're technical. When you hit that number, then we fall. That's not how it works. Sometimes it does. Like I said, the last two major market swings almost did hit the number. I was literally within a day or within 2 days on every top and bottom of those two times. But it's not going to be that way this time. But it's not about hitting a number. It's about, anybody know what it's about? You know the words I'm going to say? And this is true whether you're trying to find a major market bottom, a major market top after 11 years. It's true whether you're day trading and you want to go long in somewhere. Does anybody know what the words I'm going to say? It's not about finding the number. Yeah, it's about managing an area. It's about managing an area. In other words, when you manage an area, you can be wrong sometimes and still make money. So that's what's important, is the process of how you handle all these areas when you enter. And yes, we use technicals to try and find that area as tight as we possibly can. And like I explained, in prior years, it was extremely tight because it was just a simple, easy chart. It was almost like, ridiculously easy chart. But this time, we're going to have a little wider parameters out here. We're going to have some wider parameters. So for all of you that are, free members, and I don't know what, obviously I don't talk with you, I don't know what positions you're in. I just want to make sure that, you have a good heads up, eyes open. To take no action is an action. And clearly it is in the market. Oh, there's a couple more you can add to this list here. I left off the list because I saw it after I uploaded those slides there. If all you do is chase high flyers, you're going to have a hard time. You get some home runs, but you don't. If what you like doing is buying out of the money calls, I can guarantee your failure in the next 6 months. Options have some great uses, but buying out of the money calls is exactly the reverse of what you should be doing. Well, you have the right idea on options. And that's why I said if you're just buying out of the money calls, that is very much a loser's game. And I bring it up because some people could be making money doing that right now. But it will not last. It's like, that's the title of tonight, the test of time, longevity. You will not last doing that, period. Okay, so let me kind of wrap up with this. Like I have said, I have been here to try and provide you, meaning everyone at DTS, with some of the best free information that I can through these webinars. And also, these webinars are recorded and they're put on this page here. There's also a page at YouTube. You can click on that from the home page if you want. There's a lot of other information on the home page as well. I'm coming to a period of time here this fall. I had kind of a busy summer personally, just nice busy. But I'm coming up to this fall here where I'm really going to forge ahead and put a lot more stuff out there for you guys. And there's a section on there on the free stuff page about miscellaneous videos and some educational videos and videos for newbies. And there's also some tools, some articles, and prior educational emails that I have sent to you guys in case you joined late. You can go back and read all of them. There's like 30 of them there. Quick trading tips, which I'm going to resume sending some of those. Those are sporadic little one-line tips that I've been sending out. And that will continue. In addition, I'm always, anxious for anybody who wants to send me some trades they did for me to take a look at real quick. I'm talking about for free people. Naturally, if you're a seminar student, you get to hit off me all you want to, whenever you want to. But even if you're just a free member, if you have a question, feel free. That's kind of what I want to be here for. I enjoy helping people. And in case you don't know, I do offer 3 things that are paid for. There's a trading room for day trading that we mainly focus on the morning, but this last 6 weeks or so, we've been having to hang around and goof around in the afternoon a little bit. I have well, there's also a daily market letter, but then there's a long-term trading investment letter. And then, of course, I teach a seminar program. You can go find out on the DTS website if you are interested in any of those. But that's up to you. I don't encourage or push anybody to necessarily do that until you're ready. I find that people have to be ready to really learn. And I found through time that people really need to try it themselves first before they're ready. You know? Gary, I have a blast. I don't spend a lot of time doing this. This is what I love. I assume you mean you think I'm busy all the time. But guys in the room, right? I'm off the mic, guys, every day, 10:30, 11 o'clock. I'm off the mic, right? And then I do some stuff for DTS, usually before noon. And then I'm either done for the day or I come back, but I'm coming back like every hour to look at the screen. I don't sit there, guys, and stare at the day trading screen. I think that's very unproductive. I don't do it. If I come back and I say, I'm going to come back at this time because that's the time I want to focus on. If there's something to do, great. If I miss something, I could care less. And I do other stuff. And afternoons, sometimes I'll go out and do some errands. I go out and exercise almost every day. So that's what I mean. I have this set up in a way where I'm having fun doing it, and it's really enjoyable to me. As you can tell, I think you can tell. And somebody asked me, I mentioned this one time in the last 6 months. Somebody asked me, well, why are you like this? Why aren't you like pushing or something? Somebody didn't even know I had seminars. They've been listening to me for 6 months. They didn't even know I taught seminars because they said, well, gee, I appreciate all this information you give, but is that all there is? And I'm like, well, I do teach seminars, and I don't hide it. I feel that it's like, you ever get the credit card offer, right, where it says you can transfer your balance for 6 months and there'll be no interest, right, for 6 months or whatever. Why do credit card companies do that? And I don't want this to come across the wrong way. I'm just telling you honestly. They do that because they assume that at the end of the year, you will still have balances and you have to pay interest, right? So they make no money for a year under the assumption. And I don't care if any of you come to me or not or whatever. That's fine. I really enjoy helping people. But from my experience, what I ask people to do is try and learn on your own. I'll help you all that I can. But at some point, draw a line and say, am I really learning? And I just find a lot of people after a year, 16 months, 18 months, all of a sudden they show up and say, hey, Paul, I want to sign up. I want to learn from you. And that's great. And it's not a ton of people, but it's, that's what I want it to be. People who decide that, they're ready now at this point. I have to tell you, it's unfortunate that a very, 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 very common story is, Paul, I saw you a couple of years ago. I was going to sign up. I hesitated. I went out and I did all this other stuff. I spent $5, $10, $12, $15, $20,000 in little crap that I didn't think I'd ever do. I lost $5, $10, $15, $20,000, and now I want to start over. That's just a very common story I hear. That's just for what it's worth. So all I ask people to do is just simply, I did this tonight so you don't go down some of these wrong roads, number one. And number two, I ask you to just, draw a line, 3 months, 4 months, 6 months, and just evaluate, where are you? If you're really trying to learn, where are you? How much progress have you made? Is there a light at the end of the tunnel, or are you just doing the same thing over and over again, hoping for a different result? All right. Are there any questions from anybody? This, the last couple of slides are just, the last presentation I did, I created a top 10 videos from the free stuff page, and I emailed it to everybody. If you didn't get that, you can feel free to email me, and I will have it forwarded to you. It was sent to everybody, whether you were there or not. This is my email, by the way. Also a reminder, another great event to learn from is the Mastering Technical Analysis class, which is free. The intro class is free to everybody. And that, we just finished the seminar cycle, so that'll be coming up at the end of October, October 23rd. But if you haven't been to one of those, great. It's a seminar that you're invited to. And also a reminder every time, I just remind people, if you are interested in day trading but don't have the cash available, hopefully because it's in another account or tied up in a house or something, you can use a prop trading account where you can get 10-to-1 leverage for your money. So if you put up $5,000, you can trade $50,000 worth of stock, buy and sell all day long, just like a normal day trading person would. It's perfectly legit. There's no There's no licenses you have to get. You could be trading in a couple days. It's not a levels thing. It's just your account. Email me if you want more information about that. It's not something I do through DTS. It's not my program. It's a referral that I would give to a place that I've known for years. And I've had nothing but 100% rave reviews for this place, or I would not be mentioning it to you. I think it's a helpful thing for people who um, maybe do want to start day trading part-time, but they don't have the ability because the money's tied up and they can't sell or whatever it is. Okay? Boom, 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 boom. And that's it. And we're at the concluding side, reminding you to check out the free stuff page, right? Any questions, guys? Thanks all. Hope you enjoyed it. Hope this was worthwhile tonight for you. There may be some little gems that didn't stick with you that may stick with you in the future sometime. So take care, guys. Have a great evening.